And I would like to invite our panel. When I say your name, would you please come up to the middle here and sit beside me? Okay, the first one is Nishan. Nishan Jain is a director with SCB Malaysia. He actually holds a regional role for us, and he has been managing the liquidity and balance sheet for the bank in Malaysia. He hails from India and has worked both in India and Dubai and now in Malaysia. And he's been in Malaysia for 6 years. So welcome, Nishan. And the second one is King Sin. King Sin, who looks very serious right now. He comes from Singapore, but is actually Malaysian. Are you still a Malaysian?
Yes.
Okay, still a Malaysian.
Passport.
Still a Malaysian. And he comes from Singapore. He is our regional head of transportation finance. That is so important for most of us today in Malaysia. And lastly, Brian, who is the Chief Strategy and Transformation Officer from Malaysian Aviation Group. And thank you so much for agreeing to be part of our panel today. And he would be our third panelist. And we will go through some general questions about macro as well as transportation. And please feel free to ask your questions at the end. Thank you. Please sit. Okay. Yeah, I'll sit on the side. Yeah, thanks. Okay. So without much further ado, let's dive right in. Okay, so the first question that I would ask is for Nishant. And maybe for a start, with what we're seeing today with Sonali talking about volatilities and how reversals are a common theme right now, perhaps as a practitioner who has been operating in the market, between India, Dubai, Malaysia, and having seen all that we've seen in the world today, what would be your thoughts and your feedback on that?
So I would say in these last few months, or I would say probably one and a half odd year, a couple of themes which have been playing out quite actively across the globe have been actually on certain fronts like de-dollarization. Then we are talking about disinflation. We are talking about globalization, and then obviously the worst I would say everyone would be pretty much aware of is another trend that we talk quite a lot since 2023 is AI, right? So these are the trends that we talk about. But if you look at it, the most important factor where the world is moving now is a theme of deglobalization, right? And we are moving into a multipolar world. So there are certain factors, there are a lot of risks which have been associated with it, and those risks have been playing on the politicians' mind as well as the policymakers' mind. So from that perspective, when we look at it, we know there are certain situations which are in the world at this point in time, the Ukraine crisis, the Middle Eastern crisis, and sometimes the South China Sea crisis. So from there, what we see is these end up playing a role into our financial markets. From a dollar perspective, dollar continues to stay strong, even though at the start of the year, when we started factoring in expectations of aggressive rate cuts by US Fed, we didn't see that materialize. One, obviously, probably Fed did pivot a bit early in November or something like that. But then the financial conditions became too easy and the market started rallying, and then it went ahead of itself. That's what market always does, right? And then if you look at it, dollar is a safe haven currency at this point in time. It's very, very difficult for it to give away that status considering the transformation and the transition that we are going through in this world, right? And then if you look at it now, the next theme that we talk about, which is, de-dollarization, right? Though dollar plays such an important role, right? But it is really, really difficult to give away this kind of a status so easily, right? In the last 9 years, if you look at it from 2015 onwards, dollar as a reserve currency, as a reserve status for most of the central banks across the world, they used to enjoy 66% dollar reserves. That has gone down. It's gone down to 58% at this point in time in the last 9 years, but still 58% is a significant amount. And this has been held in the last 2 years. It's not going down. So dollar, to get out of it would be difficult. There are challenges. You need to have alternate route to trade. You'll need to have alternate currencies, mechanisms, and maybe swift systems to trade with, right? So that's where it becomes pretty much difficult to actually even think about the idea that, yes, we can actually do away with dollar in a very short span of time. Though I would never say that history doesn't repeat, right? You know what happened to the British pound after the World War First, right? It was the reserve currency of the world. And then within 10 years, leading from First World War to the Second World War, it just lost its reserve status and dollar took the dominance. So we can't say that that can't happen to dollar. But at this point in time, you need to understand, to become a reserve currency also, you need to have so many assets, and US had plenty of assets to sell to. And most of the currencies in the world are firstly not as free, and they don't have so many assets, right? Even China or Eurozone can't take that advantage away from US dollar.
Thank
Thank
you.
you.
Thank you, Nishan, for that interesting perspective. Okay, so we can't get away from dollar. It's still very important. You know, the whole world is, all the bets are stacked against everyone else except the dollar. Brian, coming back from that into your industry, which is the airline industry, you've seen a lot of volatility over the last 4-5 years from pre-COVID.
Too many.
Too many.
Too many.
And I want to ask you about your perspective. What has this global theme? What does it mean to you?
Okay, so airlines, I would say, are particularly sensitive to macroeconomic shocks, both local markets plus also global. The reason is because on a good day, our typical net income margins are roughly around 2%, 3%. So it's razor thin. And so any shock that we receive, whether it be from the revenue side or the cost perspective, will tip us over. And the three pains that we are looking at right now, as particularly as a ASEAN carrier, Malaysian carrier, the first is Forex, right? Ringgit used to be 3.8. Today it's 4.5, cycling out of 4.7, 4.8. And it's a tremendous impact when the airline itself, a lot of our cost structures are USD denominated. And so it's a sensitivity, but our revenues are not USD denominated. They are a basket of currencies. So it's the ringgit mainly. It's also ASEAN as a key market for us. Then we talk about fuel, right? So Nali talked about fuel. There's a bit of relief that it's not as high as we think it's going to be, but it's still very high. Our challenge today is the crack on Sinjat is so high. It used to be a single 3, 4, 5 USD per barrel. Today it's 20, right, and climbing. And that's because of the mix of what the refiners are trying to do. And then we talk about interest rates, right? The high interest rates regime. For us, that just means that our cost of assets, our financing and all that is just going to keep increasing. So these are kind of the macro that we look, right, in terms of how as an airline. And for us, the upside is today we are operating in a recovery mode. Capacity has not been restored to where we saw in 2019. So therefore, we are able to maintain a bit more of the higher yields. But it's not going to come for long, right? And we see yield trends coming down already because a lot more people are restoring capacity. So therefore, you see that pinch, right, on the airlines moving forward, both for passenger as well as in cargo. And that's where our stress is at this point in time.
Thank you for that interesting insight into the airline industry. And Keng Sin, just switching a perspective a bit from air to sea, in terms of the maritime space, how does this macro trend affect you?
Thank you so much. So really interesting point that you said that aviation is affected by microtrends. I think shipping is also affected by that, but on more what I call real headline events that happen relating, right? So I want to preface this by saying that shipping is extremely broad. It affects, everyone here in a different way, whether you need coal or food, or if you need oil, gas, or for someone like myself who has been spoiled by free shipping on my online shopping for many years, right? But when COVID hit, it was a perfect storm because shipping is what I consider as one of a few truly globalized industries with very little protection. So it's extremely sensitive to movements in supply chains, right? When COVID hit, we expected demand to drop, but demand continued to keep the same. But with the restriction imposed around the world, there was artificial restrictions that imposed, right? So I'll give you an example. A round trip for a container that goes Southeast Asia typically takes 45 days, but with 14-day quarantine, that suddenly became 60. So overnight, there were 30% removal of supply immediately. And imagine for everyone here that, just in time is something we've all been brought up to develop in that, in our business practices. And when that 30% removal, it was a perfect storm for shipping, where demand kept the same, supply was artificially removed, and therefore suddenly everything became more expensive to ship. When COVID kind of moved away a little bit, we thought, okay, it's going to subside, right? Then touch wood, the Ukraine conflict kind of happened, and that played out from a demand perspective, right? Instead of commodities moving very closely through pipelines, suddenly you need ships to move that, right? So for the same amount of supply that's in place, you need it to move further in different places. So there was artificial demand that created, right? And more recently, I think relevant to what you're hearing in the news now with what's happening in the Suez Canal, with whatever's happening in the Middle East, that kind of exacerbated the issue, right? The Suez Canal shortens a lot of, it's a key shipping route that shortens the route by 14 to 20 days, right? What that means is that, again, there's an artificial removal of supply because ships need to go longer to deliver the goods. And that kind of keeps on the momentum moving, right? So one thing after another, geopolitical events typically that has a negative impact to unfortunately most of the world is inadvertently positive for most ship owners, and while it's a good thing, I need to preface for my clients in the shipping with very healthy balance sheets here today that they've been suffering for many years in a very competitive situation. So that's the kind of balance, right? What happens? Is that going to be a new normal today? I think if you look at the supply-demand equation, right, the big drop in shipping happened in 2007, right? If you all remember Asian financial crisis that pivoted to global, where shipping rates started plummeting, that impacted all of us here. Supply order book was 50%. That means for every ship there is today, there's there's half a ship coming, which will double the amount of supply in the next 2 to 3 years. Today, that global order book is about 12%. So the demand-supply equation is quite healthy across. Of course, I would caveat in different subsegments of shipping impacting differently, but that's where the balance is. So, hopefully that gives you some insight on the cost drivers to different clients, and I'm happy to pick up conversations on how that impacts each and every one of you.
That's really, really interesting. Just picking up on a point that both Brian and King Sin have mentioned, that seems that the one reason, especially for the transportation industry, that's been very much affected is really by geopolitics, right? Causing, whether it is trade disruptions, supply disruptions, two wars in the last near past that we've seen. What are your thoughts around geopolitics? Maybe Nishan, I'll ask you that question. And how does it affect the financial markets?
So from a geopolitical perspective, I would rather say geopolitics is like a knee-jerk kind of a reaction in financial markets. So it doesn't extend for a very long duration. The only thing is there are certain implications out of that depending upon where it's happening. It would have an impact which will last from probably 2 weeks to 6 to 8 months. So like in the case of what had happened in the Russia-Ukraine war, right? Ukraine was known as the bread for Europe, right? They used to provide wheat for the rest of the Europe. Plus they used to export wheat to sub-Saharan countries and northern African countries, right? So Egypt went through a lot of crisis. A lot of African nations went through a lot of crisis. So food security became an important thing. And when it becomes like a bigger geopolitical issue where there is a possibility that the whole region can get engulfed into, then it has bigger consequences. So what at the moment, what we are seeing in this world because of geopolitical risks is that there is extra emphasis on food security, national security, energy security. All the countries are paying extra care and they are putting in additional efforts to secure these. And all these then fold into financial markets.
Thank you, Nishan. Okay, that's really a very quick an introduction about how macro trends is affecting us and has been affecting us in the last 12 months. But just if we had a crystal ball and we look for the next 12 months, and specifically in the transportation industry, coming back to Brian, MAG for us in Malaysia means a lot, right? It's our national carrier. From as long as I remember, I flew Malaysia Airlines when it was Malaysia Airlines. They had the best service at one point in time, and it has gone through a lot. So just coming back to being a little bit more specific, we have read with pride recently that your results have been very inspiring, and I'd like to hear a little bit from you what you have done given the very razor thin NIMs you were talking about in the earlier bit.
So interesting question, Sylvia. The 2023 story is very good, right? 2023 for us is the first time in 13 years we've actually recorded a net income, and we recorded net income of roughly 770 million ringgit. And this was the second year in which we recorded an operating profit. Now, what did we do? And if you look back at the journey of Malaysia Airlines as a whole, you would, and I'll perhaps benchmark it to COVID, right? And there's a lot of transformation turnaround efforts that's happened so far, including the massive restructuring in 2015 after the two tragedies. But really, in 2020, when COVID happened, we were actually at the point of shutting down, right? The questions that we had with the stakeholders was, should I shut down? Or is there a path forward for us to continue? And we took the gamble to say, let's restructure, let's work really hard to fix this airline and take the opportunity to deal with our stakeholders and the creditors, right? And so we went through this massive restructuring exercise, done in record time, 75 plus creditors, dealt with 15 billion ringgit of liabilities and cost savings, right? And since then, we've not stopped. We've looked at all our cost contracts. We've looked at the way we structure the teams. We've looked at the people, the capabilities, and all that. And so 2023 was kind of the cherry, right? The sweet success, right, of all the efforts that has happened since early 2020. And because of that, we're very pumped, right, and excited that the future looks very good for Malaysia Aviation Group at this point. But I will say that in 2024 is the year where we have to prove credibility, right? And all of us in MAG are extremely geared up to say we need to prove that this is not a one-hit wonder. We've got lots more runway to run, and so therefore we must show that 2024 we are still going to be net income positive. So that's the kind of ambition and the outlook for 2024. But where we are today as well is we are in the process of now being in a position of being able to reinvest. Our history, and I know a lot of you will have complaints about the way our hardware and the way we've not actually service-wise have degraded and all that, and that's fine, right? But bear in mind, in the context of 13 years plus of more, that we've not actually had the chance for reinvestment. Because in that 13 years, the conversation was about survival. It was about what do I need to keep the lights on? And what do I need to save and not spend on in order to get through that process? But because of the financial position that we are in now, our ability to now invest in customer service, process improvements, hardware. So one of the big things you've seen as well is that we've started the refurbishment of some of our old aircraft. Not all will do it because those are coming end of lease, but we've got new aircraft coming in as well. Now, the highlight that just to give a teaser, is in September, we are receiving the new A330 Neos, right? That has a game-changing cabin. That's the first time that we've actually had a lot of time spent and investments in actually upgrading the hardware, right? So that's the hope, right? And the hope is that we carry this all the way through for the next many years to come. And for us, the importance is we are setting the base for the next generation, right? So that's what's happening with MAG right now.
Thank you so much, Brian, for this, and just for the people who didn't who don't know how Brian came about to be in this panel. I was having a conversation with him, and I said that I really don't want to eat my lunch out of a box again. And is that going to be something that could happen in the future? And we launched into this really interesting conversation about what he said. So thank you very much, Brian.
May I just
that.
give a story around that, right? The lunchbox story is that was actually contract number 80. We've disrupted every single cost contract. The last one to deal with was actually Brahim Food Services, right? That's a legacy contract since 1997. And through the many years, for whatever reason it is, our customer service was failing on FMB. So that was the point where we decided enough. We will bite the bullet, we will change. Now, if you look at the history of airlines, no airline actually goes from third-party catered into what we call a self-catering environment. So today, we are in a self-catering environment, and we successfully cut over in the two-month period. Now, was it painful? Yes. Unfortunately, yes. I mean, a lot of us had to deal with boxes, meals in boxes, and I know it was not a happy time. But since then, because we've stabilized, today our CSI scores, our customer sat scores are, it used to be low 60s. Today it's high 70s, reaching into the 80s. And why do we do that? Because we are now able to diversify our supply chain. We are now able to contract with other food suppliers who can provide better quality food to us, and so that our customers are happier. So that's a very anecdotal story around the restructuring that we've done.
Thank you very much. I am flying Malaysia Airlines tomorrow, so that's
thank you.
That's an indication that I believe in you. Thank you so much, Brian, for sharing that. And maybe I'd like to pivot a little bit to Keng Sin now. We've heard a lot about the transformation in the shipping industry as well, especially on the sustainability side, and how there are lots of evolving regulations around the maritime. Maybe could you enlighten us and educate us a little bit about what's happening and what can we expect coming up?
Thanks, Olga. I first want to hope that whatever I say come true, and if that happens, then I might not be here next year. So if I could predict what will play out, but we are in a really interesting space right now. IMO, our global regulator in the maritime space, has set a net zero ambition. So the world has to go figure out, how do I get there? And clearly there's no one path. Everyone is taking a slightly different route to get there, whether be it burning an alternative fuel or installing slightly better wind sails, etc. Right? It's a consensus that the world needs to take, but it's market driven. Right? What's in the short term? What's really interesting is that I think Sonali touched on elections happening this year. We know there's US elections. We know there's the India elections. But there are, to our last count, 54 elections that are going to happen globally this year, right? Which will swing very clearly a position that governments will need to take, whether it is for maritime, decarbonization, or the geopolitical question that you've kind of posed earlier. So that is an interesting preface where the world needs to agree on the common path, but we don't have a clear visibility of how I'm going to get there. I think it will play out in regional efforts. For example, in Southeast Asia, we are leaning towards a alternate fuel where ammonia or methanol could be a possible solution. Australia's championing ammonia because they are a net producer. The US championing hydrogen because they are a net producer of hydrogen. So there is a little bit of kind of vested interest in that. what I do want to touch on a little bit, going back to your earlier question and kind of geopolitical, is that the interesting thing is while this plays out from a sustainable perspective and people are investing, we are also seeing our clients thinking about not only sustainability, but the geopolitical impact of how that's running their business. And this could mean, looking at your supply chain upwards or downwards to say, look, we know how the tensions of US and China might play out. How does that impact us if I choose, for example, investing in ships that come from China or raising renminbi instead of US dollars, or looking downwards to say, if I am someone that produces car in a region that is neutral, how do I kind of position myself to capture opportunity? For Southeast Asia, I do think it's an interesting opportunity for us here in Malaysia, given that we are neutral to a certain extent. I'm really keen to see how this plays out, both from a business decision-making perspective, but also kind of on a sustainability perspective. Yeah.
Thank you. Thank you very much. And thank you, panelists, for that very exciting conversation. Okay, I'm going to take this time and open the floor up for questions. If any one of you have anything to ask, please feel free to ask anything. Ken?
Just share your personal view of the guidance view. What is the change or shift to ammonia as shipping fuel inevitable?
Yeah. So I think I need to be very careful because someone's sitting here who's leading the charge on ammonia fuel vessel. So I think it is definitely a viable option, right? So there are three leading fuels that are competing again to find a solution, right? So ammonia, methanol, and hydrogen, right? Methanol is being led, by Maersk, who has kind of come out and ordered $2 billion of vessel. There are different challenges with the different fuel types. We know that the first ammonia engine will come in 2026. It is definitely a viable option given we do have a natural source closest to us in Australia and potentially in India where they can manufacture that. We need to get the protocols correct because ammonia is a toxic fuel that could, that we need to get right because even though the probability is low, all it takes is just one wrong move for the entire industry to move right. But I want to take a slightly a step back, right? I think from a banking perspective, we don't dictate what fuel is going to be because we are not operators in the market, right? We rely on clients like yourselves to figure out what is the best solution the market will take, right? What we can do is provide the framework for capital to move to the most efficient solution. And what I mean by that is that we're trying to incorporate climate risk as part of our credit risk decision making. I know you must have gotten calls from our analysts to say, look, what are you guys doing for your net zero perspective and asking you in detail, right? And one of the reasons behind that is that we're trying to figure out how climate risk impacts our clients. Right? If I look a few years back, it is a very subjective question. Today, with the rollout, for example, on EU ETS, which is the European Framework for Carbon Tax, it's a very clear price on carbon. Singapore is going to impose a carbon tax in a couple of years' time. It's $25 per barrel. So there is now a clear bottom line, direct impact on anyone's P&L from a carbon tax perspective. In shipping, we do have a benefit of being able to measure the carbon impact for every particular vessel, so it's extremely clear. I can't say the same for other industries as well, but that's the kind of general direction that I think the industry will take. So back to your answer question, I hope it does play out. I am very keen to see. We are there to support if ammonia is a solution, but we do rely on market participants to kind of figure out where it goes. We do have a view. We are supportive. I think it's very clear. We are supportive, right? So if you do have an ammonia fuel vessel that you need us finance, we are keen to kind of look at it to see how it works.
Thank you for your question. Any other questions?
Actually, maybe I'll have a question. Sorry.
Oh, sorry.
Sorry, if there's a question. Go ahead.
Yeah, just for Brian, I think I just want to hear your views on sustainable aviation fuel, yay or nay, and
Yeah, the sustainable SAF, right, is here to stay. Yeah, right. The question is how much and how fast. And we in MAG have already committed to certain targets along with our partners right? Our One World partners, even within IATA and all that. So we do have targets that we want to achieve, but they are long tail in the sense that we will see commitment of net zero in 2050, certain percentage of SAF by 2035 and all that. Our challenge today as an airline industry is SAF in comparison to Sinjet Carol is about 3 to 5 times more expensive. And that's primarily also driven by a question of supply. The suppliers, there are not many in the world. And in advanced economies like US and Europe, for sure, because those are also driven by government mandates. So we are actually looking at Singapore and seeing what is developing there now that they're introducing an SAF levy. Our priority right now is how do we secure supply? And we are working with various parties around SAF supply in Malaysia. And our concern is, can we get it in fast enough so that we can meet our commitments on COSIA and into the markets that we fly to? So there's no question about SAF. It's a question of how fast and when can we actually secure those things. Yeah.
Yeah. Thank you for that. And Sonali, you had a question.
Well, I did, but it's very broad and anyone can answer since you're all sort of clients. How important, and maybe Brian in the panel, you're the one I'm asking the question, but anyone else, how important is it to have government regulations around the environmental issues to drive real behavior that we want from corporates, right? Because self-regulating brings other things into perspective. So how important, and do you think that's happening in, at least let's put it in ASEAN, is it happening? Are ASEAN governments really important?
There's been so thank you for that. There's an interesting question. I just had this discussion this morning as well. The ASEAN governments, generally, there's a lot of interest levels around how do we get this going. Singapore obviously pioneering because they are quite unified and in their decision making and they know what they need to do. There's a debate around saying that whether the community like airlines should be driving that discussion on SAF versus government putting on mandates. And the consideration here is when government mandates something, especially to airlines, it becomes a little bit tenuous, a little bit difficult for airlines to be able to work around it, right? Which may not be the best thing. So we've actually taken the stand that the community must drive the SAF targets. They must drive the commitment on sustainability. Where we need help from the government is the policies on supply. Because today, the producers of SAF, they are very far and few between, right? And how do you set the standards and policies to encourage more suppliers to come on stream? How to divert investments and resources to SAF supply? That is where we think the government would be most helpful. And then the community itself, I think, has shown sufficient commitment globally as well as in ASEAN to drive for the agenda, right? So we work very closely with AAPA, the Airline Association of Asia Pacific Airlines, ICAO, IATA, and even One World to drive that agenda. So airlines pretty clued in globally. We need to be participative in the sustainability agenda. So right now we just need the rest of the industry, especially the SAF producers, to come on board. And that's where we feel government policy and government mandates around supply would be very useful.
Thank you very much. And unfortunately, we're out of time for the first panel. So thank you all so much. And thank you for being such a kind audience. Thank you. Thank you, panelists.